Under PAS 16, we have depreciation. Depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. Depreciation method. There are a variety of depreciation methods. PAS 16 mentions three examples, namely straight line method, diminishing balance method, and units of production method. However, PAS 16 does not prescribe any specific methods. The choice of depreciation method depends on management's judgment. Straight line method. The straight line method determines the estimated salvage value of an asset at the end of its life, and then subtracts the value from its original cost. The difference is the value that is lost over time during the asset's productive use. That difference is also the total amount of depreciation that must be expensed. Declining balance method. The declining balance method is a type of accelerated depreciation used to write off depreciation costs more quickly and minimize tax exposure. With the declining balance method, management expenses depreciate at an accelerated rate rather than evenly over a scheduled number of years. Units of production. Units of production assigns an equal expense rate to each unit produced, which makes it most useful for assembly or production lines. The formula involves using historical costs and estimated salvage values. The method then determines the expense for the accounting period multiplied by the number of units produced. How do we depreciate using straight line method? An example is shown in the illustration. On January 1, 2001, Entity A acquires equipment for a total cost of 1 million pesos. The equipment is estimated to have a useful life of 5 years and a residual value of 50,000 pesos. The annual depreciation is computed as follows. We have the cost, 1 million, we less residual value of 50,000, then we get the depreciable amount of 950,000. To get the annual depreciation, we divide it by the useful life of 5. Then we get the annual depreciation amount of 190,000. The carrying amount of the equipment at the end of 2001 is computed as follows. We have the cost, 1 million, the accumulated depreciation, which is 190,000 times 1 year, equals 190,000. Then we less it to get the carrying amount of 810,000. Therefore, Entity A recognizes depreciation of 190,000 pesos per year during the 5-year of life of the equipment. The carrying amount of the asset at December 31, 2005, when the asset is fully depreciated, would be 50,000, equal to the residual value, or 1 million, or the cost, minus 190,000 times 5 years. Revaluation model. Under the revaluation model, a PPE is carried at its fair value at the date of the revaluation, less any subsequent accumulated depreciation and subsequent accumulated impairment losses. Revaluations are applied to an entire class of PPE. A class of PPE is a grouping of assets with similar nature. The following are examples of a separate classes: land, land and buildings, machinery, ships, aircraft, motor vehicles, furniture and fixtures, office equipment, and bearer plants. Accounting for revaluations. An increase or decrease in the carrying amount of a PPE resulting from revaluation is recognized in other comprehensive income and accumulated in equity under the revaluation surplus account, except for the following. A. An increase that represents a reversal of a previous impairment loss is recognized in profit or loss as impairment gain. B. A decrease in excess of the credit balance in the revaluation surplus of the asset is recognized in profit or loss as impairment loss. The revaluation increase or decrease is computed using the following formula. We have fair value less the carrying amount, then we get the revaluation surplus. Fair value is defined as the price that would be received to sell an asset or paid to transfer a liability in an orderly transactions between market participants at the measurement date. Also, the fair value is determined using an appropriate valuation technique in accordance with PFRS 13 fair value measurement. We also have carrying amount, which by definition is the amount at which an asset is recognized after deducting any accumulated depreciation and accumulated impairment losses. By using the formula in getting the revaluation surplus, we have an example shown in the illustration. On December 31, let's say 2001, Entity A determines that its building with historical cost of 20 million pesos and accumulated depreciation of 5 million pesos has a fair value of 17 million pesos. The revaluation surplus is computed as follows. We have the fair value of 17 million pesos less the carrying amount, which is 20 million pesos minus 5 million pesos, which is 15 million pesos. We get the revaluation surplus of 2 million pesos. By continuing the previous illustration, assume that the building has a remaining useful life of 10 years with no residual value. The annual depreciation in subsequent periods using the straight line method is computed as follows. We have the fair value of 17 million pesos divided by the remaining useful life of 10. We get the annual depreciation of 1,700,000 pesos. Subsequent accounting for revaluation surplus. Revaluation surplus is subsequently accounted for as follows. A. If the revalued asset is non-depreciable. Example, land. The whole of the revaluation surplus is transferred directly to retained earnings when the asset is derecognized. B. If the revalued asset is depreciable, a portion of the revaluation surplus may be transferred directly to retained earnings as the asset is used. The portion transferred each year is equal to the difference between the depreciation based on the revalued carrying amount and the depreciation based on the original cost. Transfers from revaluation surplus to retained earnings are not made through profit or loss. Continuing again the illustration above, the amount of revaluation surplus to be transferred directly to retained earnings each year as the asset is used is computed as follows. We have depreciation based on the valued carrying amount of 17 million fair value divided by its useful life of 10 years. We get 1,700,000. We also have depreciation based on original cost of 15 million carrying amount divided by its useful life of 10 years. We get 1,500,000. Then, if we subtract depreciation based on original cost from depreciation based on revalued carrying amount, we get a 200,000 amount of revaluation surplus transferred to retained earnings each year. As mentioned earlier, revaluation increases and decreases are recognized in other comprehensive income and accumulated in equity unless they represent impairment gain or impairment loss. These concepts are shown in the following illustrations. On December 31, 2001, Entity A acquires a piece of land for 1 million pesos. Entity A revalues the land to fair value on the following dates. On December 31, 2002, we have a fair value of 800,000. On December 31, 2003, we have a fair value of 1,300,000. On December 31, 2004, we have a fair value of 900,000. The revaluation decreased on December 31, 2002 represent impairment loss because the carrying amount of the asset is decreased below its original cost. By using the formula, we have the fair value of on December 31, 2002 of 800,000 less the carrying amount or the original cost of 1 million, we get an impairment loss of 200,000. The impairment loss is recognized in profit or loss rather than in other comprehensive income. The revaluation increase on December 31, 2003 is partly impairment gain and partly revaluation surplus. By using the formula, we have the fair value on December 31, 2003 of 1,300,000. We less the carrying amount or the fair value on December 31, 2002 of 800,000, we get a total increase of 500,000. If we subtract impairment gain or the reversal of the 2002 impairment loss of 200,000 from the total increase of 500,000, we get a revaluation surplus of 300,000. The impairment gain of 200,000 pesos is recognized in profit or loss, while the 300,000 revaluation surplus is recognized in other comprehensive income and accumulated in equity. The revaluation decrease on December 31, 2004 is partly a decrease in revaluation surplus and an impairment loss. The decrease in revaluation surplus is recognized in other comprehensive income, while the impairment loss is recognized in the profit or loss. By using the formula, we have the fair value of on December 31, 2004 of 900,000 less the carrying amount or the fair value on December 31, 2003 of 1,300,000, we get a total decrease of 400,000. If we subtract the decrease in revaluation surplus of 300,000 from the total decrease of 400,000, we get an impairment loss of 100,000. Recognition. The recognition is the opposite of recognition. The recognition refers to the removal of a previously recognized asset or liability from the entity's statement of financial position. Disclosure. Under disclosure, we have general disclosures for each class of PPE. A. The measurement basis used. B. The depreciation methods used. C. The useful lives or depreciation rates used. D. The gross carrying amount and accumulated depreciation at the beginning and end of the period. E. A reconciliation of the carrying amount at the beginning and end of the period showing additions, disposals, and other changes. Additional disclosures. A. Restrictions on title and PPE pledged as security for liabilities. B. Expenditures to construct PPE during the period. C. Contractual commitments for the acquisition of PPE. D. Compensation for impairment losses. E. Changes in estimates relating to PPE. Disclosures for revalued PPE. A. Date of the revaluation. B. Whether an independent valuer was involved. C. The carrying amount of each revalued class of PPE if they had been measured under the cost model. D. Revaluation surplus including changes during the period and any restriction on its distribution to shareholders. Encourage disclosure. A. Carrying amount of temporarily idle PPE. B. Gross carrying amount of any fully depreciated PPE that is still in use. C. Carrying amount of PPE retired from active use and not classified as held for sale in accordance with PFRS 5. D. When the cost model is used, the fair value of PPE when this is materially different from the carrying amount.
That's it! Maraming salamat po at kayo po ay nanood at umabot hanggang dito sa dulo ng aming video. We hope na kahit papano kayo po ay may natutunan at kahit papano may na-impart kaming knowledge sa inyo. Muli po, this has been Taxmaniacs. God bless po sa ating lahat at good luck po sa inyong mga future CPA.